Welcome to Cyprus News by FinancialMirror.tv. Cyprus increased the amount of its Euro bond issue from €1 billion to €1.5 billion following the massive oversubscription witnessed when the book building for the 4-year bond issue was held. Finance Minister Harilaos Stavrakis, who played a crucial part in the success of the issue by heading roadshows in London and Paris, in addition to individual presentations to foreign fund managers, described the success as unprecedented. Our issue was oversubscribed by a record 5.5 times since we received bids for €5.5 billion against the €1 billion on offer, said Cyprus' jubilant finance minister at a press conference. Cyprus needs the funds to cover maturing debt of €1.9 billion during 2009, as well as cover its deficits in 2009 and 2010, and invest €200 million into the deficit-ridden social insurance fund. The agreed rate was described by Stavrakis as very competitive at 3.85%, which is lower than the 5% budgeted by the government as the cost of borrowing during 2009. Stavrakis told the Financial Mirror that €1.25 billion were subscribed by foreign investors and €250 million by local investors. There were a total of 103 foreign investors, including central banks, large commercial banks, insurance companies from the US, UK, France and Germany. The proceeds from the issue were expected on June 3, 2009. Cyprus banks seem to be bucking the trend by producing first quarter results that near the market expectations, and in some cases doing even better. After-tax profits for the island's premier bank, the Bank of Cyprus Group, were nearly halved from €116 million in the first quarter last year to €63 million in January-March this year. Despite the global financial crisis, the bank saw its network increase by more than 250 branches after the acquisition of a majority stake in Russia's Uniastrum, a move that also propelled the group workforce to just under 12,000 staff. The bank said this showed a satisfactory level of profitability, with strong liquidity and the high quality of its loan portfolio, strengthened by the issue of €645 million in convertible capital securities. Marfin Popular Bank, whose bosses have raised a storm by declaring they will move the base of operations from Nicosia to Athens, reported a 62% drop in quarterly profits to €40 million. The group saw a 16% increase in deposits to €25.3 billion, while loans rose a healthy 22% to €23.9 billion, both levels being above market expectations. Total assets reached €40.7 billion, an annual increase of 29%. Commenting on first quarter financial results, Group CEO Efthimios Pouloutas said these reflect the repercussions of the crisis climax, which was reached during the last 2 quarters of 2008. The island's third largest bank, Hellenic, posted a net loss of €12.8 million in the first quarter, compared to a profit of €23 million in the same quarter a year ago. Hellenic Bank said earnings were down because of a 16% reduction in interest income and increased provisioning amid difficult economic conditions. Offering a glimmer of hope for the year ahead, the bank added that the results were not necessarily representative of the whole year and that the financial climate continues to be especially burdened by the global financial crisis, which deems it very difficult to give accurate projections for the future. US investments in Cyprus amount to more than $379 million, Ambassador Franco Bancic said, noting that this figure will soon increase substantially as an American energy firm begins exploring for oil and gas off the southwest coast, becoming the largest foreign investor on the island. Foreign direct investments to Cyprus have so far totaled $263 million, with $16 million arriving in the last year alone, he said, adding that the gradual liberalization of foreign direct investment regulations has made Cyprus an increasingly attractive destination for US investors. Tax revenues collected in the first 4 months of the year fell by 10.5% year-on-year to €487 million, from €544 million for the same period in 2008. According to the Inland Revenue Department. The decline in revenue is mainly attributed to the scaling down in receipts from capital gains tax, which tumbled by 82% to €21.3 million from €116 million a year ago, owing to the sharp decline in demand in the property market. Finance Minister Harilaos Stavrakis has ordered all government departments preparing their 2010 budget calculations to impose a freeze on increases in costs as part of a drive to curtail public spending. Civil service pay increases will be exempt since these are set by collective agreements with the Civil Servants Union. Meanwhile, the government aims to save €250 million in the 2010 budget by reducing all non-productive expenses paid to civil servants for overtime and travel expenses. Lazaros Savvidis, Chief Returning Officer, has announced that a total of 1,126 polling stations will operate for the June 6 European elections, the second to be held in Cyprus since the island's accession to the European Union in 2004. A total of 410 stations and additional 2 special stations will operate in Nicosia, 320 in Limassol, 50 in the free areas of Famagusta, 179 in Larnaca and 131 in Paphos, while for the first time 34 polling stations will operate abroad. Turkish Cypriots living in the north can exercise their voting rights in specially designated polling stations in the districts of Nicosia, Famagusta, Kerinya and Larnaca, while Turkish Cypriots living in the government-controlled areas as well as European citizens living in Cyprus will vote according to their place of residence. That's all, and thanks for watching FinancialMirror.tv.